Hello everyone, a very good morning, good afternoon, and good evening to all of the viewers. This is your host Vaibhav. In today's session of Daily Stock, we are going to look at the fundamental and the technical side of chip maker Qualcomm, the chip of which are present in most of the Android phones, and in coming fiscal year, the next fiscal year, we will have the Apple using its chips to power its phones as well. So this is now going to be available across the spectrum from Android to Apple devices, and that has been a major breakthrough for this company, the semiconductor company, which is now soaring since its announcement made in made along with its financial results. From there onwards, there has not been any looking back, and the stock is now trading almost close to 20 percentage point higher from where it used to be trading prior to the earnings release. But the interesting part is if you look at the financial statements, you will come to realize that the fourth quarter earnings for the fiscal year 2023 were actually lower. The revenues are lower in comparison to the revenues of same quarter last financial year, that is financial year 2022. And on most of the parameters, the slowdown is there, and that has been attributed by the company to the macroeconomic challenges, the things like technological war between the US and the China is also having its impact. The concerns surrounding the national security have also affected the major players like Huawei, which earlier was also a dominant Android player, and also other Chinese brands have been impacted. Apart from that, as the economy has gradually opened up, the uses of smartphones have not been increasing as earlier pace, and that slowdown has also impacted the revenues of the company, with its revenue declining by more than 20 percentage point. And this is for both the segments, the QCT and QTL. The QCT is of course the main cash cow for the Qualcomm, and there is a bigger slowdown. But at the same time, now we have to look at the future, and its tie-up with the Apple is likely to be a game changer for the company, with also its emphasis on leading to be a leader in on-device generative AI and mobile computing space. There, the company is taking the steps to be a leader, and it is expecting to be a innovative chip maker to deliver the performance as the demands rises, and we have other competition in the ARM space. Now let us look at the consolidated statement of the company. If we look at the revenues, there is this 24 percentage point decline, with the EPS being almost half of what it was a year back. And for the overall year, the revenues are 19 percentage point lower, with current fiscal year revenue standing at $35.82 billion compared to the fiscal year 2022's revenue, which were at $44.2 billion. I have already given you the idea why the revenues of the Qualcomm were markedly lower in the fourth quarter of this year. And also, if we look at the overall announcement, the annual results also, there is this significant slowdown, but that is not having the expected impact of share price again losing ground from the current level. But other than that, there is now upward surge with the expectations of better revenues in the coming quarter, that is the first quarter of financial year 2024. And also the market is expected to rebound with the market share of Qualcomm likely to rise, and that has given the impetus for the investors to again get back into play and buy the shares which are substantially lower than the peak achieved way back in 2022. We will be looking at the technical charting as well once we are done with the fundamental side of the story. Here you can see that revenues are markedly lower for the QCT and QTL, both these segments, but the revenue slowdown is much higher for the QCT compared to the Qualcomm Technology Licensing Division. This is QCT, Qualcomm CDMA Technologies, and this is the main money pooler for the company. The forward guidance for the first quarter of financial year 2024 is on the higher side. The revenues are expected to rebound to be in between US dollar 9.1 billion to 9.9 billion. So the company is confident that its business is likely to do better than this quarter, and for that, we will of course have to rely on the company's word at this point in time, and the picture indeed looks brighter. Now, let's see what's the technical side to the Qualcomm shares, and here the announcement came in for the fourth quarter results, and since then there has not been any looking back. For last two sessions it has been trading almost flat, but the bias is markedly on the upside, and I am not really counting on it to decline in coming sessions as well. We will have to trade with the bullish bias, and if you are a short term trader, then buy on dips can be a good strategy to profit from these bullish sentiments as long as it is trading higher than where it started. The price levels of around 120 are going to be a key price level from the short term perspective. As long as the Qualcomm is able to sustain above it, we will have to go with the buy on dip strategy. But if the any deep extends much lower, then we will of course have to give it a second thought. But till then, this momentum can be used to our advantage, and we can go with the momentum. This is kind of a momentum trading and investing, but purely from the short term perspective, because if we consider the medium term to longer term charting, there are challenges. The Qualcomm has been consolidating for almost a year now in this price range of around 100 on the lower side to 140 on the higher side. And if this time around also the story is going to be the same, then we have already seen substantial rise from these lower band to trade almost close to this higher band. So buying at this time from the medium term to longer term perspective is not going to increase the is not going to get you a good risk reward ratio, and with this upside having been capped at around these prior swing highs till we have a clear cut breakthrough on the upside, we will have to go with the current situation where we have seen the Qualcomm finding resistance multiple times. So this time around also we will have to be cautious. So if you are a medium term to longer term trader investor, then a cautious approach is warranted at the current level. But from the short-term perspective, the price zone is still favorable for the buy for the long trades, and we can to trade, continue to ride the momentum. And for the longer term, it seems to be in a consolidation phase, but for the picture to change clearly, we will need the Qualcomm share price to rise above these 140 price level, and then in the next dip, we can give it a thought for getting involved in the subsequent ride on the higher side. But that is, of course, going to take a couple of weeks, couple of months, and we will have to be patient at this time. So if you were simply trying to take advantage of these clearly established range, then you are late to the party, and there is not much of an upside left as per the current consolidation range. But if you are a optimist and overly optimist at that, you can even go for the buy trade with the hope that maybe this time it is going to be different, and with this fundamental story also supporting a long trade, you can take your chances. But the risk reward ratio is not that favorable, and I would advise to take it easy, sit on the sidelines till the clarity emerges, and for next couple of weeks we will have a keen eye on the Qualcomm share price and see how things develop, how it reacts to these immediate resistance, and looking at that we will get a good idea of what lies ahead in the store in the future, and we can then make a fresh assessment and think about getting involved for the ride, or simply to overlook it and go for the better opportunities. And that kind of summarizes my assessment of the current scenario. The upcoming quarter is, of course, expected to be better for the Qualcomm, and in the coming years, given its leading technologies, I am quite confident that the Qualcomm will be able to deliver outstanding revenue growth in the next couple of years also, with its tie-up with the Apple is also likely to boost its revenues, and in the Android space it already has a dominant market share. So on both sides it is going to be present now, and that is going to be a real win-win scenario for the Qualcomm. But for us, we do have to be mindful of the timing and also the risk reward ratio, and that is where some questions are indeed arising, and because of that we will have to be patient in these circumstances and wait for better opportunities. And if you want to take some chances, then maybe at smaller amount you can even take some position positioning, and it is the possibility is also there for the current upward momentum to continue, and it can deliver a fresh swing high. So for that, we will have to use these lower time frame charting, in which we have a better risk reward ratio, and see if it gets us where we are intending it to be. And then in the subsequent correction and consolidation phase, we can turn our gaze to the longer time frame and try to profit in that time frame as well. So that's my assessment looking at the fundamental and the technical side of the Qualcomm, and I would also encourage you to write to me in the feedback of what you have felt about Qualcomm since its earnings were announced, and it has been rallying non-stop from that day. It has gained almost a 20 percentage point even on back of more than 20 percentage point decline in the revenue. But I have highlighted the reasons for why this divergence is happening and how to play this divergence in the coming weeks. Now it's time for me to sign off. And if you have any query or any idea to share, do write to me in the feedback, and I'll be more than happy to take the discussion forward. See you tomorrow with a equally interesting stock to work with, to look at, and see if there are emerging opportunities for us to trade and invest. So do come back next time around tomorrow. See you tomorrow. Thank you all for joining in. Goodbye.